Everyone is talking about the Dangote IPO. That's the listing of the Dangote Refinery in the Nigerian Stock Exchange. Some are talking about the good side. Some are saying that it will be an opportunity to transfer wealth from one generation to another generation, from one person to another person. But there are things they are not saying, and those are the things we'll be discussing today on Clockwise. Those things they are not saying about the Dangote Refinery that will be listed on the Nigerian Stock Exchange from June. Welcome again to Clockwise. My name is Providence. And as we do it here, I bring my guest, a very sound guest, one that has this deep passion for the stock market. And he's going to be answering certain questions because today will be dedicated to answering questions about the Dangote refinery and other questions. Welcome, Mr. Kekanen.
Thank you very much for having me.
Before we proceed, I have some questions first that I actually got from one of our listeners or our followers. Let's see if we can actually provide some answers to those questions before we proceed. First, the person said, I'll not mention name, I'll just read what the person said. He said, help me check what to do with my Orlando stock with average cost of 53 Naira and Sepla stocks with average cost of 8,600 Naira per shares. Should I sell now or buy more?
Okay, so Seplat actually went as high as 9,200. And that was because, especially in the heat of the energy crisis. But I think the market is beginning to price in a possible resolution of the conflict in the Strait of Hormuz.
Okay.
And so energy is still a very strong play for this year, because the reality, like I told you, even if we still, there's a lag, what we call a lag, a long and variable lag in when it comes to energy pricing. So some of the things that have happened now are things that should have happened as a result of activities or events that happened some time ago. So I think for Seplat, I would say that you don't want to sell everything. You could take profit of it, of course. Okay. Of course, like we say on this channel, if you don't take profits, the market will take it for you. So, and we also mentioned in the last podcast that energy, it trade energy very cautiously, because the reality is that if the situation or what is happening, the war in Iran and the Strait of Hormuz is resolved, or there is any very positive news around it, the price of oil related stocks would go down. Okay. So what I would say, sell some, take profit, but don't exit completely in case the markets continue to push higher.
All right. I think that applies to the two questions because
Yes.
they are both energy.
Yeah, energy
No,
stocks.
okay. Now the second question is please can you suggest or recommend some very good stockbrokers in Nigeria that I can open accounts with? Please, thank you.
Okay, so I could mention name, I could mention Stanbic, IBTC, I could mention a bunch of them, but what I would say is most of the people that are watching our audience are basically young people, really. And so what would apply to you for the most part would be to use investment apps. The process is very long. You need to, like I mentioned earlier in a couple of videos before, you need to have your Central Securities Clearing System account opened. You have to have the number. There are a lot of things that you have to go through, but what you could cut all of that by getting on investment apps, and the fees are relatively the same. Most of these apps charge like 1.2 to 1.4%, for trading fees. Deposit fees could be, but if you are depositing in Naira, then it could be around, I think if you deposit, there is 100 Naira. If you deposit, even if you deposit as high as 10 million, it's still about 100 Naira. So the fees, because the fees are low, it will be advisable. And what is more flexible is for you to really do investment apps. You don't have to call anybody. You just go on the app, set up an account, and then before you say Jack Robinson, you are on your first trade.
All right, thank you. I think those questions have been properly answered. Now let's move to the conversation of today.
Yes.
Which is in the initial public listing of Dangote Refinery, and it could commence from June. And one of the biggest conversation around that particular event that is about to happen is that he'll be paying dividends in dollars, and everybody will like, wow, so they'll be getting dividends in dollars. Now, the first question I like to ask: don't you see that we'll see a situation where the government will bring out a policy in order to prevent people from accessing dollars? Because imagine you being paid in dollars in Nigeria. We could see something and the government will just revert the policy. Do you see something like that?
So it's not a government policy, but before I go there, let me also mention that the June timeline is a speculation,
Okay.
actually. Before you can say a company is going to issue a public offer at a particular time, you look at their SEC filings. So, which is, it's not stated the date really. So we just have to be careful. It's just a speculation that by June, because I mean, based on the comments made by some people, we speculate that June could be the timeline.
Okay.
But we need to see a filing that specifies the exact date. Okay, having said that, the second one is, so the way it's supposed to work is, once you are paid, so Nigerians can invest in Dangote Refinery in Nigerian naira, and they have the option of being paid in US dollars. And so what should happen is, it gets to your central securities clearing system, and then hits your bank account. Obviously domiciliary account, and then you withdraw. But I mean, you are very correct that the government could say, okay, everything should be redeemed for Nigerians resident in Nigeria. Everything should be redeemed in Nigerian naira. That will help to reduce the pressure, because think about it: if people receive the US dollar, I mean, there's no positive impact in the Nigerian naira.
Yes.
But if people receive, banks are by law maybe allowed to convert. So banks will have reserves, and that helps to contribute to the reserve that is held by the CBN. So that could be a policy that the government will do, but we are not very certain yet. This is something that the company Dangote itself. When I buy a share of a company, the contract is between me and the company I'm buying the share. And if the company tells me, we're going to pay you in US dollars, they should be able to pay me in US dollars.
But
we're not.
They
could say, okay, listen, you need to have a domiciliary account where remittances or dividends will be paid to. That is possible. Something that could possibly happen.
Okay, before we actually move to those technicalities, now you see, they're actually listing only 10% of the entire company. Do you think it will be possible for the normal retail trader or retail investor to have access to these funds? Because 10% for like everybody. What of the institutional, the pension funds and the rest of it?
But it's a reality. The fact is, whenever such listings are done, the top priority are the institutional investors, the pension funds, sovereign wealth funds, and institutional investors. Then you have those are the people that get the high priority guys. Then you also have the high net worth individuals that can buy as much as 100, 500 million and all of that. Those are high net worth individuals that can buy such. Then before you then have the ordinary Nigerian, the average Nigerian, the ordinary Nigerian. So the way it works is that they will allow you to apply though. Yeah. But let's say you do 500, you want to buy 500,000 naira worth of Dangote refinery shares, you could be given 100,000 or less. It's not as if they will not give you, but what they will give you will be way less than what you're.
So will it be better for you to buy in the secondary market than buying directly in the primary market?
No, whether you are buying secondary market, you're buying direct primary market, it's literally the same thing. By the way, you can't even buy in the primary market. That is, like I told you, that is for banks and for the big financial institutions. Obviously, you're going to buy in the secondary, but even if you're buying secondary market, it is still going to be, these banks are not just buying to flip. That's what you should know. Most institutional investors are not buying stocks to flip. They are not traders. These guys are long-term investors. These guys that can sit on those shares for the next 10 years, for the next 15 years. I want you to take an example, take a cue from when Saudi Aramco listed. That is it's literally the same thing. So it's not something that they will buy and sell the next day. No. So if you can get whatever you can get, it's important that you can get it. But I think the focus should be on not just buying Dangote cement. No, sorry, Dangote Refinery, because that could be very, very tight and very competitive. But have you also looked at other areas that could benefit from Dangote, the IPO? For example, the Nigerian Stock Exchange is going to be insanely boosted, because we are talking about a company that's worth between 20 and 50 billion dollars coming into the market. Yes, we know it's not going to be launched. It's not going to be launched in Nigeria. The IPO will also happen on the London Stock Exchange. And think about it. It allows liquidity. It allows a higher volume of liquidity, meaning that the volatility of the stock will not be as rife as it could have been if it were just in the Nigerian markets or Nigerian stock markets, where the liquidity is very thin.
Okay, now you see, in basic economics, we're told that demand actually raises price, and more demand, the more the price of things go up. Now, a situation whereby there's a lot of, should I say, a lot of hype about the Dangote shares, Dangote Refinery shares, and how dividends will be paid in dollar, and everybody's expecting. If we see, let's say, for instance, let's choose a date, for instance, by June, and everybody's interested in buying these shares, and we have a lot of people rushing to buy these shares. Don't you think there'll be a ripple effect on the product? Since there is high demand for the shares, it may actually affect the product, which is petrol. There will actually be an increase in price because of the demand.
Demand for the stock of the company. Yes. Not exactly. Okay, so you talked about demand and supply. Actually, if there is going to be a price appreciation, it's actually going to be on the stock value. On the stock. That's why we say it is a re-rating opportunity for Nigerian investors. So you might see at this point, there's something in markets called price discovery. So we are already projecting about 20 to 50 billion dollars in valuation. So what that means is, let's use the high end, which is 50 billion. If they are doing 10%, that means they are looking to raise $5 billion. Now, $5 billion, of course, I'm not sure the Nigerian stock market can actually absorb that. That's why we are doing a dual listing. But I don't be surprised to see maybe 100 or 150% price increase on the first day of trading.
So that leads to a reduction of the production.
But it doesn't directly affect the price of petrol. No, it doesn't. It affects the price of, obviously, the stock, Dangote Refinery stock, but not the price of petrol. If anything, it would allow Dangote Refinery to expand, improve productivity, and be able to refine so that their landing cost will be, the production cost will be lower, and then they will be able to, save Nigerians or deliver at the pumps at a way cheaper rate. So long term, we believe that this listing is going to actually bring down because Dangote literally is the only guy, the only formidable local production capacity, 650,000 barrels per day. And remember, it's a modular refinery, meaning that it can still be increased. They can literally increase the capacity if they want to. And I believe that these $5 billion that they're trying to raise would allow them to, I'm saying based on a projection of 550 billion in valuation, it will allow them to expand their capacity and also produce more at even a more efficient level, so that Nigerians will begin to enjoy petroleum products at a lower price.
Okay, now, do you advise somebody that is just starting out in the stock market? Do you advise the person to actually invest in Dangote Refinery if that's your first investment you're about to make in the stock market?
Okay, so my advice has always been, if you are starting in the stock market, I can't say it enough, start with broad market index. Don't start with choosing names. You don't understand how the stock market moves. Let me give you an example. I am very certain that it's even possible that Dangote could list let me give just a number, 100 naira per share. Before close of business, it jumps to 150, 160 naira per share. Then the two of trading, it falls back to $80, 80 naira per share. So what that means, that volatility almost always happens when a listing like this happens. Yes. Remember also that there are existing investors in Dangote. Yes. The people that actually, hold shares of Dangote might want to use this opportunity, this liquidity event, to be able to do what? To rotate into other areas. Investors are not married to any position. Professional investors understand what we call exit plan. When you're investing in companies like this, there is always an exit plan. And that exit plan, the biggest of them is the IPO. It allows investors, institutional investors, high net worth individuals that have invested so far into the Dangote Refinery to be able to cash out. You can say, listen, you can say this company is worth this. You can't really take that to the bank. When you can really say a company is worth this is when the public is willing to pay this amount for that company, for the company shares. So that's why the realized market capitalization of a company is when it goes to the market. It IPOs. So people can tell, okay, this is what the market, this is what investors are willing to pay for this company. So that provides a liquidity event for investors to exit. And so that's why you see all those price volatility. So the point is, as the newbie, remember, a newbie believes that it only goes up. He doesn't believe it goes down too. So, and it can go sharply up and sharply down. And that's the reality. So the best thing to do is you start your journey with a broad market index. Broad market indices have a way of smoothing out those volatilities because you're looking at, like, let me give you an example, like the Nigerian stock exchange, Nigerian exchange group, the NGX. You have if you go to, for example, the US, you have the S&P 500, the Dow Jones, the NASDAQ. These are a collection of companies. So if one goes down, another one goes up. So it smoothens the index. Now, it's a better pill to swallow for a newbie than for you to go into a highly volatile stock and then you see such huge price swings. Yeah. So to avoid that, I would always advise new investors to start with a broad market index, and then when you are a little bit more sophisticated, you can begin to pick names.
Now, I was actually listening to a guy that was talking about this Dangote stock one day like that, and somebody actually dropped the comments, and I'd like to clarify that comments. The person said, why is Dangote actually listing only 10%? Why is he keeping 90% for himself? He still wants the public funds and he's keeping 90% for himself. Why not 50%? Why not 30%?
Okay. So the thing is that, of course, that is expected for someone that doesn't know how the market works. The thing is that Dangote is not the only people that are keeping 10%. The way it works is when you start a company, you need funds to be able to push that company. Dangote has been taking in a lot of investment, even from the African Development Bank. These are equity investments, meaning that the NNPC, for example, has 7% already. There are some high net worth individuals that have some junk. So companies usually have something that they use for fundraising. Now, when you are allocating, you are raising funds, and companies really don't go, how much do I need? Let me paint an example. Let's say a company A, let's call that company Dangote. Dangote has a net worth of, let's say, about $10 billion. And then Dangote says, okay, we want to go to the market. We want to do some kind of exit and in the process raise capital. So they go to the market and then they say, we want to raise 1 billion. That's 10%. Now, with that 1 billion, what would they do? They use that 1 billion and expand. That's why I call it IPO, is initial public offering. doesn't mean that they were not going to issue more shares down the road. They will issue. But when they issue down the road, remember, if they bring in 1 billion, they would expand their capacity. They will expand their cash flow. Their balance sheet gets to improve. So the valuation of the company improves remarkably. When that happens, what you see is that the company's valuation gets higher. So the company had to raise 1 billion, they had to give off 10%. Okay. Now, if they invest that 1 billion and are able to achieve better customer, a higher customer base, higher cash flow, higher revenue, everything, bigger revenue numbers, actually, the valuation of that company can move to as high as 50 billion.
Okay.
If they want to raise another 1 billion, they are no longer doing 10%. No, they are not doing 10%. As a matter of fact, 10% of 50 billion is 5 billion. Do you understand? So they will be doing something in the neighborhood of maybe just 2% will raise them 1 billion.
Okay.
So the company gets, you shoot yourself or you sell yourself short if you issue more shares. You only issue as much as you want to raise.
Okay.
In the capital market is where companies go to raise funds for expansion, for different things, for expansion, for more strategic investments and all of that. So Dangote has decided, okay, 10%, issuing 10% will be enough to help them meet their capital requirements.
Now with this, I'm still on the dollar, the dividends in dollar. Don't you think it will actually make our stock market a dual currency market?
No, it's not going to make the market a dual currency market. Remember, Dangote is not just listing in the Nigerian Stock Exchange or the Nigerian Exchange Group. Dangote is listing in the London Stock Exchange. Now, one of the things that, you were in this country, one of the things that made investors to flee, was the fact that the Naira was not stable, was dwindling. So, there are some investors that might not be interested in a Naira denominated investment. Okay. So you are shutting out a lot of investors.
So would that bring more of the pension?
That will bring more of institutional foreign investors.
The sideline.
That were on the sidelines. Okay. Nobody wants to invest in a country whose currency is depreciating every single day.
Yeah, because of the Naira.
Because of the Naira. So what that means is that Dangote is able to allow itself to capture investors that would otherwise not want to invest in it because it's Naira denominated. Because the guarantee is that you can, whether you are an institution, a foreign institutional investor, a foreign high net worth individual, you can still redeem your dividends in US dollars.
Now let's look at other stocks that will actually profit directly from this listing. Because if you cannot get Dangote stocks, there are other stocks you can actually get. That there will be a ripple effect. So let's look at those other stocks that will actually profit from.
So you had mentioned one when we started. Dangote, this is what we call an oil and gas value chain. Dangote, you have the upstream, which is exploration and production. You have the midstream, which is storage and transportation. You have the downstream, which is refining and distribution. So when you have a strong refining capacity, guess what? It positively affects players in both the upstream and the midstream. So what I would say is companies, we expect it to have a very positive impact on other oil companies, other companies that are involved in other parts of the value chain.
Okay, to be a ripple effect.
There's been a ripple effect, number one. Number two,
Seplat will still be okay.
So Seplat will be still okay. It's not just Seplat that is an oil company. We seem to talk about Seplat almost all the time because it was one of the, prominent. We have Aradel too that is doing so well. We have a bunch of other Nigerian oil companies. Now, you also have food companies. You know why? Because Dangote also produces fertilizers. So if Dangote, if this IPO is expected to, like I said, have Dangote raise enough capital to be able to expand its productivity, one of which is in the fertilizer industry. Fertilizer, petrochemicals, plastics, and all of that. So you have more fertilizers means that farmers will be able to get these Currently, we are still importing a ton of fertilizer used in this country. And when you're importing, you are not just paying the cost of the fertilizer, you are paying the logistics cost of bringing it to Nigeria. Good. So if Dangote comes in this regard, that means the cost of food will be cheaper, and that means the company, especially food stocks, would actually get a boost. The next one is logistics. Logistic companies will benefit a lot. Dangote is a behemoth when it comes to refined products manufacture. So what that means is that diesel companies, logistic companies rely so much on diesel, rely so much on premium motor spirits and all LNG and all of that. So that means that if Dangote, like I told you earlier, Dangote is able to expand its production, that means we could be self-sufficient in petroleum products, energy products. Yes, it will not, the price of energy will not go down. As in, it might not go down the way you think. Yes. The ordinary person will think it will go. No, because oil is still priced, even oil that's sold to Dangote is still priced in US dollars. Good. And then it's still globally priced. But the logistic cost of moving it to Nigeria will reduce. So you will have stability. What I mean by that is you are sure products are available. One of the challenges we've always had is scarcity of products, that which leads to price hike. But as far as the stability in access to products, that means some of the logistic challenges we're having would begin to disappear. And that is a plus for logistic companies. So companies, stocks of companies that are involved in logistic, freight and all of that, movement of products and all of that will also benefit very significantly. Then, with this, you should also know that even consumables, consumer staples would also benefit significantly, because fast-moving consumer goods would also benefit. All of these goods are goods that you need to move them from point A to point B. Customers or businesses factor in the cost of transport into whatever they are selling. And when products are cheaper, guess what? People, if let's say if I'm selling phones, for instance, I'm using phones, but it's actually for FMCGs. But if a phone is selling for 500,000, how many people do you think will buy? Maybe a handful of people. But if that phone sells for 200,000, won't you have more people buying? Yeah. So that means you're going to have more. And what actually influences the cost? It is what? The cost of logistics, or moving it from one place to another. So if that cost is reduced, that means we're going to have an appreciation. Margin expansion will be the order of the day for Nigerian businesses. So it's going to have a ripple effect into FMCG. It's going to have a ripple effect into on logistics, oil companies, food companies, and all of that.
Okay, now before we actually go, because I don't want this particular episode to be too long, before we go, let's assume you as an analyst, you try and you not actually invest in Dangote Refinery stocks. Let's just assume that. Which other stocks will you buy? List them. Can you list 4?
I will list, yeah. So I would look for Seplat.
1.
I will look for Guinness.
2.
That's in. I will look for that's consumables. Okay, so let me put it this way. So I'm being intellectually honest here. I would really focus on energy. I'll focus on consumables. I'll focus on energy and consumables. The reason why I want to focus on energy and consumables is because logistics, here is the deal. There are beyond oil, energy pricing or the cost. There are other things, bad rules and all that come in factor in. But the ones that would directly benefit, first one is energy, because the value chain becomes properly established and there's money in the value chain. So I'll get it. Wando, Seplat, corn oil, you name them.
Okay.
Then I will also invest in the financing, the banks, financial institutions. Here is why. Because banks make a ton of money from IPOs. Yes, they make a ton of money from IPOs. Because they are the ones that run the investment banks, the ones that run the guarantees and all of that. So financials, consumables, and energy. those are the places.
So in case you don't meet Dangote, because you don't meet Dangote Refinery stocks, financials, banks, and
banks are under financial.
Okay.
So financials, energy, and
Consumables,
consumer staples.
yeah, I think we'll leave it there.
Okay.
And we'll wait for June. We're told June. All speculations, all arrows, all pointers are saying it's June. Let's wait for June and see what will happen. But before then, you can actually go through what we are talking about and see the areas you can actually participate in case these big institutional investors decide to take the larger space, and you as a retail trader does not have any more space, but you can still profit from the goodies that will be coming from the listing of Dangote Refinery, the Nigerian Stock Exchange. And that's why we'll leave it here for today. And I thank you again for coming.
You're welcome.
And we're going to continue this conversation again in another topic. Before we go, please do not forget to like, subscribe, and put on the notification bell on this channel, because we bring amazing content. And also do not forget that the elite of the 21st century are not those who do not go to school or those who will not go to school, but are those who have refused to evolve as the environment is evolving. My name is Providence. I'll see you again.